Okay. All right, we'll keep talking about Neo. Right, you're in a downtrend here. Your 8's on the bottom. Your 60's on the top. So you should be short. Right, add some shorts into the top of the bands. Anything above the 30. Right, so I'll highlight the 30 here on my daily. All right, and this is the point where your bands flip and you're back in an uptrend. All right, you're making long-term higher highs. And then you get the higher low. So you're making higher highs and higher lows now. This is the point where you stop shorting and you can buy dips. Right? And the reason I've highlighted this 30 on the daily is because, you know, this is not a setup necessarily. That just came into the top of the bands. And we're not always going to short just because we're at the top of the bands, right? We want to cycle cross. We want to set up. And we see the cycle crosses here, which is actually right here in price. So what we can do is use a lower time frame to catch this. We want to have a main trading time frame that is supported by both a higher and lower time frame. Okay, so more often than not, for most of us, this is going to mean, oh goodness, got a lot of drawings here, right? If you remember this green line I drew in, that's the 30 on the daily. So that's the middle of our bands. 15-minute. Right? The higher time frame is the 30. And we want to be adding in the lower time shorts above that. 5-minute. All right? Remember, our bands are in a downtrend on the daily. So on the 4-hour, we can see this based on the direction of pi. Or sorry, for day trades, you're mainly trading on the 50 minute. Because pi lines up closely with the 60, which is the bottom of the bands. You want to be trading with. And I'll highlight this too, because it's pretty important. Well, I'll go into this more in the multiple time frame analysis video. And you also want to be doing this in direction. This will give you a peek. 30-minute cycles, all right? This is the bottom of the bands. In this case, it's the top because we're in a downtrend. But where you'd like to be. You guys get what I'm talking about, right? High, buying low. So that's the bottom of the bands. Inside of this 30-minute cycle, you might have multiple 15-minute cycles. Where once you look at the 4-hour on the 30-minute, right, you're selling cycle highs on your 15-minute, and then once you're back crossed up, you can see that bottom of the bands lines up pretty closely with pi. I know this might be kind of confusing. Right, and again, it's not exact because these are just areas. They're not exact pinpoint spots or anything like that. But when we come in and we look, we see, all right, pi looks pretty much the same swing directionally, angularly, all that stuff, and even location-wise typically use to the bottom of the bands on the daily. And we'll use this a lot. 4-hour or your 1 hour as your lower time. We'll use this a lot. And the bands on the 4-hour daily as your main, are like the 8 trading time frame on the daily, okay? And then so now we're starting to see as your higher time frame. Right? Let me hide the one candles here again. Than not, and the one that most of you guys are gonna. Well, I won't hide the bands, but try and ignore the actual bands. Think of these bands here as the 8 on the daily, and you can start to see. You know, once a day we have our daily bands here, right? We have the top band, and we have the 8, which is our EMA bands here. And if this is confusing you, don't worry. Again, I'm gonna go into it in detail. And then for your later post, but long term, let's do the same thing we did in the daily, right? Right. If pi is like your band on your daily, okay, then you're in a downtrend. The weekly is below it. Time frame, and when the 8 flips above it, you're in an uptrend. Okay. Okay. And then when you break back below it, you're back in a downtrend. You get above it, you're back in an uptrend. It's gonna break below it, you're in a downtrend. Trade completely. All right. Break above it, short-term uptrend. Back below it, downtrend. The day trade little snippet I gave you might have been confusing. So let's talk about that. And it's good to see this because then if you're trading the 4-hour, you don't have to go keep hopping into the daily to see what does my trend look like. Main this trading time frame. Oh, it looks like this. It looks like a higher time frame. You know, what direction are my bands going on the daily? Well, 4-hour pi is going up, so the bands are going up. This is going to really rely on strong understanding. I'll show it just of the structures. Show you guys that, but see of a single time frame. Pi was going up on the 4-hour. So if you can't bands are going up on the daily, almost exact location, not quite. Then you're directionally and angularly pretty much the same. Time frames and compare them all, right? If you don't understand, now let me go into why I'm telling you this. What these exponential moving averages are. If you don't know what candle setups are on a single time frame, if you recall, it's going to be hard to understand this kind of stuff and combine that with using multiple time frames. Right, you're going to get really confused. Okay, at the candles back. So you really need a good understanding of the individual individual topics that we've discussed
already.
We want to be adding shorts really moving forward with this. All right, this is gonna be really complex and it's easy to confuse yourself.
The 30 again.
Things I would want to add shorts in a downtrend.
Understand the EMA bands.
I'll just do it.
Watch that.
I want to
video.
do it in the current downtrend, guys.
Watch the candle setups video.
Keep scrolling back.
Support, resistance, trends, trend lines, chart patterns.
We want to add shorts above the 30 in a downtrend.
And again, biggest takeaway here is this idea of a 3 time frame structure.
Right? In an uptrend, we want to add longs.
So let's go through
below the 30.
Pause if you need
Pretty
to.
simple
If you guys want to make note
right?
of some of these things, but I am going to delete them.
Now, it's not something as simple as,
here, we'll leave.
I get above the 30, I instantly short.
Leave this since we're talking about that.
Right? No. Take this example. You have a really high cycle, and you get a topping tail set up with bearish engulfing right at the top of the bands.
Let's look at Ethereum.
That's a good short
in the bull market,
right? But your cycle is not crossed yet.
Afterwards, okay?
So you wait, you get the cross. You get another topping tail set up with a bearish engulfing. Boom, that's where you add the last 80% of
averages
size, right? At 20% on the first setup, 80% on the second one.
Is not going to
and then you book gains when your cycle gets low.
Price action.
Or whenever you rip to new lows. You always book gains.
Some of these higher time frame trend,
okay.
So that's actually a great example right here.
Are not going to work on
short setup you can take on the daily.
Launched, right?
Right. So if you remember in 2017,
but say you wanted to catch this not
bunch of
here,
ICOs
but up here.
All these new coins were coming out, so you couldn't really chart them on the weekly.
So we'll highlight again,
this
now
30. There's been a whole year of price action, right?
And keep in mind, if you're trading the daily, it's at this point, right?
That doesn't mean we can't.
You're like, all right, we're getting into the top of the bands.
It just means our higher time frame.
I kind of want to start adding to my short, but look at your cycle; it's only halfway up.
But once we have some of these bands created, we can see the direction of them. That's really enough info, and you start getting some cycle action.
Is one little trick of the EMA bands.
Okay, at this point,
you want to catch something rolling over on the daily. You can look at a higher time frame.
Right, when our weekly is in an uptrend with our bands, you can look at cycles rising.
Lower time frame. I don't know if I said higher. I meant lower.
Okay.
Look at a lower time frame.
Your cycle's rising, and your bands are rising.
And check this out. This is a perfect example of where
short.
If you remember, this was a short up to the top of the daily bands, and that's exactly
relative to our bands, right?
I'm going to show it again just to show how perfect it is.
So when the bands are rising,
exactly at
price is above the bottom band. And again, we're not super tight about this. Like
right at the top of the daily
below
bands,
it for a short period of time. We're not going to cut everything, go short because of that.
Right, we care about time, 4-hour pie line,
and distance, right?
And this plays into this idea of having a fractal model.
Below these
you'll see
EMAs, like you can see we did here.
The bands on the 4-hour.
We broke this, and then
that's going to be our 30-minute pie line on our day trade time frame.
Whoa, not follow through.
And
what I meant to say there was we broke the band and only spent one candle below it, right? If we had gotten another candle on the daily downward follow through, then it would have made sense to cut some positions.
I wonder if they're going to represent anything.
But if you just get, if you're just below it,
what do you know? The resistance that the bands are on the weekly,
especially when cyclically,
or I'm sorry,
so low.
The resistance we saw in the bands on the daily.
But then if you break that pivot you made
as
below
our
the bands,
8 resistance on the weekly,
and you get follow through from the second candle,
right?
Right, you guys see that?
So we can see, all right, price is struggling to get above the 8 on the weekly. That's big resistance. That also lines up with the bands on the daily.
That's when you cut.
Furthermore, that also lines up with pi on the 4-hour.
So
now, why does this matter? Well, if we're trying to, we're trying to make a good trade.
Now, on lower time frames, on the daily, on the 4-hour, we can catch
if you remember,
shifts
at this point,
and multiple
on the daily, the cycle
is
why we don't just right about here.
Time frame. But we
so you're shorting,
right?
Anticipatory to the cycle.
You're
shorting, assuming it's going to roll over with the dip when it's possible.
Than selling the rally,
right? Price is making
and now at this point, you'd rather be selling the rally than buying the dip until.
So you come in on the 4-hour.
Your bands are back in an uptrend. You're back above the 8.
All right, well, if the daily's really going to roll over,
okay,
then the 4-hour is going to roll over
now,
first.
In addition to this, we'd like to be buying.
And so what we can
on
do
the right-hand side of our cycle, meaning
cycle crosses,
the cross,
and bearish setups on the 4-hour before that happens, right? Get stopped at on that one. The next cycle cross, you got a bearish engulfing setup, and that's the short you can take. You actually make some good money. Cycle gets low, you get an engulfing setup, cover it back, right? Another cycle cross, another bearish engulfing setup. Take it back.
Right, so I've got lines here posted
that shit, right? This is
after the cycle cross, and this doesn't mean all right, my cycle's crossed. I'll buy now, no matter what price is doing.
I know that was kind of quick.
It just means, if your cycle has crossed on your weekly, maybe that means you could be buying cycle crosses on your daily and your 4-hour.
You see how we can be trading with our 4-hour cycles?
And we'll go into this. We'll keep these lines on the chart and just keep these in mind.
And in this whole time, if you remember, our daily cycle is doing this.
Don't worry about it, okay?
And the lines actually cross over
cycle crosses up on the weekly
here.
And you'd rather be buying dips after cycle crosses
on the daily. We can't short size because our cycle hasn't crossed.
You can see this.
But on the 4-hour, we actually can come in and short size.
That was not cycle when you should safely long.
Where we know where to put our
this is when you should look to safely long on your lower time.
If I come in with a cycle cross and a bearish setup,
again, that might be kind of confusing now, but we'll go into this
exactly above that setup
daily.
I know it's exactly a 5% loss, so I can calculate my position sizing perfectly.
So now we can see, you can see the circles on where the weekly cycle crossed, right? And now we can get this idea of multiple cycles within a cycle, right? This was only, this might have been one weekly cycle
in there.
But look at how much info we have on the daily, right? There's so many more cycles you could be trading, adding and reducing your position, growing your overall position.
That would have had you short at the top of the move. Whereas the bearish engulfing on the daily was confirmed here. That's where you would have shorted, or maybe down here.
If we look here on the daily at one of these cycle dips, the one right before 2017.
Perhaps 5 to 10%.
Okay, let's keep in mind this blue line here is when the weekly stochastic cycle crossed up.
I mean, 10%, that's like
and that doesn't mean buy here
for a whole year right there.
Okay, it simply means we're going to start looking to buy dips on the daily
instead of just the daily.
Now, if we look at this point here, right?
And this will be the only time I hit on this. But
our daily bands are still in a downtrend.
This idea of using a 3 time frame.
Price is making lower lows.
Where you have your main time frame,
lower highs,
the daily.
Okay, this is a
higher time frame,
pretty textbook downtrend right here.
And now, you have your lower
price has put in a nice candle setup, a nice big engulfing.
This is what you're mainly taking your trades based
and now, if it can make a higher low afterwards and then make a higher high,
entries,
you'll be back in a daily uptrend. And because your weekly cycles just crossed, you can start buying dips. But until then, anything bought is contrarian to your trend. All right?
So, for example, hop into the weekly here.
Sorry, I just wanted to get rid of some of that.
If you were
some of those drawings
trying to trade this back in, what was this, 2017? All right, you'd have your bands are in a downtrend.
Okay, sorry, I know
maybe you're not buying until you're back in an uptrend. Okay, now your bands.
So remember, this is your weekly cycle cross up.
Rising. So now at this point,
after this point, you're looking to more safely buy dips on the daily.
Long term,
so let's pull up our cycle now.
It's rising. I can be buying.
Where do we get a dip after that? Right here, an engulfing setup.
So that long term signal is important.
The cycle cross on the daily.
Waiting for this on the weekly, and I didn't risk, longing here.
This is after we put in
here. Like none of that. I just waited until my long-term trend was
ready. This is after we put in a big engulfing setup here.
By the time my long-term trend confirms
let's check out our fibs, see what fib we bounced off of, if any of them.
Has already confirmed it long
Boom, right off the 618 fib.
Flipped bullish here.
That is a beautiful setup. Now your bands are still in a downtrend. You've not made a higher high yet, right? So maybe you don't put in too much size yet, right?
And then when you made another high,
maybe you just put in
confirmed it further.
25% of what you want.
Being confirmed.
And then once you get your bands flipped back bullish,
no reason not to buy dips.
Which we can see happens.
And here's a good example of one you could buy.
Okay.
Daily cycle
your
cross.
8. This blue line. Here, I'll get rid of the
stop below the low.
Candles here for a second.
Make some money. Cycle crosses.
Right.
And again, this is one of those cases
8
where when you get big
rises back on top. Your 60, which previously was resistance, now becomes potential support. You should take
profits in that situation, regardless of waiting for the cycle cross or some bearish engulfing.
We'll put the candles back on now. Price now has gone from making lower lows.
Let's see if using the 4 hour
and lower highs
exit even better. Right, so
to
maybe you don't.
Higher low
you wait until this
relative to here,
and then you take some profits.
And now a higher high relative to here.
Now let's see where you.
So previously,
on the 4 hour.
No reason to be buying dips. Right, you're in downtrend. You short the rally. All right, and then you put in higher lows, higher highs. Oh, I got rid of the weekly cycle crosses when I deleted. But if we remember, the weekly cycle crossed up in here.
Aha.
Right? Now we know, all right, my long-term cycle is back up.
Exhaustion.
Our bands on our weekly are still bullish.
Take that out. Bearish engulfing.
And we'll go back to the weekly real quick.
4 hour. All right.
We can see where is price located right now. Okay? Price was right near that bottom support band.
Instead of taking profits in the
right in that area. So now we've got, okay, our weekly cycle's crossed up.
Gets nice and low.
I'm near a higher time frame support band.
Right, waiting for the cycle.
I've got a nice bottoming tail on the higher time frame.
Enter, stop
and
below the low.
On my main trading time frame, the daily,
which there's not really a pullback, but another cycle across on the 4-hour.
I've got
Here's the engulfing setup,
one low
right there,
which we moved away from,
stop below the low,
and then a higher low off the 618 fib with a candle setup and a cycle cross.
Right, another cycle.
That's a beautiful first entry right there.
Another chance to add.
And then once you break, okay, remember your weekly cycle is still crossed up. You're still good to be buying daily dips. Now you don't buy right after the breakout, all right? You take profits on your longs after the breakout. Take some off at pi.
That's the bottom of my daily.
Right, often pi will be resistance after a bounce. Right, that's this red line. Just keep in mind, just like the EMA bands, guys, price ebbs and flows to and from pi. Okay, so you see how price got to pi very quickly here and went straight up there with the high cycle. Okay, that was a sign to be taking some profits, okay? If you just, slowly grind your way out to pi, that's a different story because you've gotten there slowly over a longer period of time. But when you get there, what was this?
Different coins, different situations where they work.
This was a 45% move in like 6 days. So you take some gains on that, especially when your cycle's high. And then you remember, right? Your weekly time frame is still rising. You're still in an uptrend. You're making higher highs and higher lows in your daily, and your bands now are rising. So you can definitely be buying dips. Okay, you get a cycle cross, an engulfing setup. Boom, that's a dip you buy. And now you can raise your stop on the piece you bought here up to here or below the low. Right? And then moving forward, excuse me, you can continue buying cycle dips. Right, that'd be in here. And you can raise your stop on these cycle dips as you go. Now, there's one thing to keep in mind. The most important stops, okay, you can have stops below each candle setup. That's okay. But the most important stops are going to be the big pivotal higher lows or lower highs. Oh my goodness, go away. Okay, so this is a major stop. This is a major stop. Now this is a major stop, right? This was the low point of this move. So that's a major point. All right, this was a major higher low. This one too. Okay, so those kind of pivots are the most important pivots for your stops. But for a large amount of your position, you just want to be trading with the cycle, right? So you'll hear me talk about trading around a core position. And what this means is, say for this first 25% I bought, 10 to 20% of that or 10 to 15% I will never sell until my major pivots break down. Okay? So anytime I make a cycle low, somewhere below the 8, like this, these are not as important cycle lows because they just hold the 8, right? And we can see as the trend goes, there will be tons of holds of the 8. Not all those are going to be important. But anytime you break the 8, that's a more significant pullback. Okay? And if you can find support there and make a higher low, that's really significant. Okay? And we can see this on the weekly too, guys. The most important pivots are the ones made with cycle lows. Okay, so this one, and you see how they get below the 8 too. All right, they're not just like this, like this, like this, like this. These are not all cycle lows. Okay, that's a cycle low. That's a cycle low right below the 30, and then you break that low, and you're going to be in trouble. Right? Likewise, major pivot. That was a major pivot. Now, sometimes, again, the weekly is lagging, so sometimes the major pivot will happen before the cross. Right? The cycle didn't cross until up here. And that's why the weekly is our higher time frame for swing trading and not our main trading time frame. Okay? Our higher time frame pivots are what we keep that core piece with. And then when you break a higher time frame pivot and get follow through, that's when you get rid of that core piece. All right? And then the majority of your size, you want to be trading around the cycles on your main trading time frame. And what that means is when you get an engulfing setup like this one, and you buy a setup like that, you're taking off 80% of whatever you bought by the time your cycle crosses again. All right, so the cycle crosses, you should be out of 80% of your size. You can keep on 20%, right? Ride this core position until your daily breaks down. And then when you get the cross back up, okay, you can add that 80% right back on. Cycle cross down, you should be out 80%. Back up, back in, back down, back out. All right, makes sense. And then once you've popped back into an uptrend, and remember, and here is when your weekly cycle crossed up, you can be buying all these dips on the daily. All right? You guys following that? And then even more so, right? Sometimes even the daily is a little bit lagging, right? So here's the engulfing setup, right? And then your stop is actually almost 10% away. So you can't use as much size as if you had a smaller stop. So let's go look at this daily dip here, the daily cycle cross, and see if you couldn't have got a little bit better of an entry on the 4 hour, which is your lower time frame. Because remember, we want to use lower time frames for precise entries.